How will COVID-19 impact the way commercial real estate is financed? Join us as we bring active lenders together to discuss their debt and equity programs. Register for this must-attend event.
Welcome to another episode of the CRE Advantage. My name is Charles Williams. I am the managing member and owner of Palmier Realty Capital. Today we have a special guest with us, Mr. Daniel Palmier. Mr. Palmier is the founder and CEO of the nationally acclaimed specialty finance company, UC Funds. Daniel, you prefer Dan or Daniel?
Both. Usually, when I was in trouble as a child, I was known as Daniel.
Okay.
But I go by Dan today.
You go by Dan. Okay. Well, Dan, welcome to our podcast. We're certainly
nice to be with you.
Yeah, we're certainly happy to have you guys on. So Dan, if you don't mind, tell us a little bit about yourself. I'm sure you have an interesting background. And how did you get into commercial real estate? Tell us about your career and where you are now.
Okay, so I graduated from University of Notre Dame back in the early '80s, and I'm an accountant and CPA by training. And I always loved real estate, and so I started with a couple of developers and went on to Wall Street. Worked there for about a decade and a half back in the '90s, and then I went out on my own in the early 2000s and started the first venture in specialty finance after I honed a lot of good skills on Wall Street. So my passion is to be an entrepreneur, and I love delivering specialty financial solutions. I think that what drives me is being creative and figuring out how to do something others can't and or won't, or something that's just sophisticated, and that's one of my passions, to be able to figure things out. And then I left the New York Shark Tank, dog eat dog world, a lot of cliche, so that we could deliver, and I say we because it's all about people, mm-hmm. And so we could deliver specialty financial solutions and do it as sophisticated as anybody else, but do it like an old-fashioned bank where your customer, you want to take care of your customer, your customer's needs are really important. And I just felt that would be a unique posture for a company that provides really sophisticated financial solutions. And we feel that everybody should win and feel good about doing a deal and getting it done.
Okay, very good. So for the benefit of our audience, I want to kind of break down a little bit of what you mentioned. You mentioned the word, and I mentioned it too in the introduction, specialty finance. How would you define specialty finance and the role that type of financing plays in the commercial real estate space?
So specialty is unique. Specialty is tailor-made. Specialty is other than what you would get from a traditional capital provider, lender, bank. So if you go to a bank, they tell you, well, we have X, Y, Z available to you. If you go to Fannie Mae, Freddie Mac, same thing. If you go to a life insurance company that is a lender, they have programs. A specialty financier creates, they tailor-make a solution that an entrepreneur can take and do what they want with. So it's like, Jello or Play-Doh. Play-Doh's more appropriate. That if somebody wants, a vase that looks like this or looks like that, we can make it for them. So it's actually really, it's a fun, for us, it's really fun and creative that we can, tailor make a solution that somebody can use that will work for them, because every real estate deal is unique.
Very good. So I guess one way one might explain that, when you go to some of these more established lending institutions, maybe it's agency, as you mentioned, Fannie Mae, Freddie Mac, or a bank, you're trying to take the need and fit it into their established box. Whereas
right.
it's the opposite with you guys, if I understand you correctly, you take the box and you fit it to the need. Is that correct?
Yeah, I would say that in more specifics, if someone needs what, you know, 70% financing or 75, 80, 90, 95, we'll tailor make a deal for that solution, right?
Okay.
So if somebody is price sensitive, we'll tailor make a solution that is less costly. If they have little equity, we'll tailor make a solution that gets them to, whatever, 90, 95%, so that they don't have to put equity or raise equity that they don't have. So we're listening to what the need, of the entrepreneur, the user of the capital is, and we're figuring out how to get there for them. And then we'll do it quickly.
Wow, very good. That's excellent. So now you mentioned that you guys are also, you play at various levels in the capital stack. You can come in as senior debt, obviously. Do you have a mezzanine program on the debt side as well?
That's right.
Okay, so you're senior debt, mezzanine, and you can come in at preferred equity and JV equity as well. Is that correct?
That's right. That's right. So we call that a one-stop shop for commercial real estate capital solutions. So the one-stop, if you're looking for a first mortgage loan, whether it be long-term, short-term, we call that a bridge loan. And bridge loans are typically 12 months to 36 months, where someone's buying something, maybe putting some CapEx into it, some renovation into it. We call it, the slang would be put some lipstick on it and then selling it or refinancing. We do mezzanine financing, which is in layman's terms like a second mortgage position. It's subordinate to the first. We'll also do second mortgages, by the way.
Wow.
We'll do preferred equity, which is mezzanine-like, because it's got a fixed return. It plays about in the same position in the cap stack. And then we'll do joint venture equity and ground up construction. And we also do permanent loans. So we will, as an intermediary, work with many established partners to provide the long-term capital, which is usually 10 years or more, that is required if somebody wants to stay in the asset for a longer term period of time at a lower rate, and that's the cycle. So that's the the birth to, I call it college, which is interim bridge loan to permanent loan, everything in between, and that's our one-stop shop for commercial real estate capital solutions.
Wow, that's very good. So you're able to participate at all levels of the capital stack and the full cycle of the asset.
That's correct. So
wow.
Organically, sometimes we do that. So
Yeah.
Sometimes a developer will come to us and they want to partner with us. They want JV equity. So we'll bring JV equity and they'll say, well, can you do the first mortgage construction loan? Well, we'll do that too, if they want it. And then once that project is finished, is completed, and it has a certificate of occupancy, it's ready for a permanent loan solution. So that'll be Fannie, Freddie, CMBS, Life Company, what have you. So we can do that, everything. The key to one-stop shop is to have customers that say, I'm going to do what I do best,
Right.
which is find opportunities.
Right.
And you at UC Funds, please what you do best in giving us capital solutions. So that's the real marriage in what we do.
Okay, very good. Now, do you participate out any of your loans, or do you fund all of your loans just by yourself?
98% of what we do is our capital.
Okay.
So we have various capital that we've accumulated over the years, and we've been very fortunate that capital has come to us. So we have very ample capital that we've invested for many years.
Okay, well, very good. So now UC Funds, it started in 2010. So UC Funds started right after the last economic crisis, right? And so you kind of caught the end, I guess the end of one cycle and the beginning of another cycle. Would you say that's correct?
Well, we made it through the last cycle with the predecessor fund that I started in 2004.
Okay.
So we were most of the team that is part of UC Funds was the same team that made it through the last cycle. So we call it muscle memory. So we have a lot of muscle memory on how to succeed, through really pandemic difficult times. So we're managing predecessor fund, and we got an inbound call from a Forbes 50 billionaire, in late 2009, and they wanted us to buy distressed notes for them. And during that due diligence period, we educated that investor who had never invested in United States commercial real estate or finance of any kind on what a more sustainable business would be. And they bought into that, and they invested over the last 10 years over $1.5 billion with us. So
Wow.
that was our first investor. They're still investing, and then we brought other investors of foreign, domestic insurance companies, sovereign wealth funds, and that's the pool of capital that makes up UC Funds.
Okay, very good. So now, what would you say are the lessons learned coming through the last cycle, going into a new cycle, now into another quote unquote economic crisis? What are some of the key things that you've learned? If you were to give developers or customers advice as we move forward into this new economy, what would you say are some things they really want to keep in mind?
First off, don't do it. It's way too painful. But if you have to do it, my philosophy is to first stop, count your blessings, smell the roses, do what you can control. Make sure you surround yourself with great people, which we have. And, we are unique. We were built for these turbulent times. And we do have what I call muscle memory from the success of the 2008-9 times. So my advice would be, you have to work hard. You got to work smart. You've got to have some blinders on for things that are just not relevant to your mission. So focus what you can control, and work hard and do the right things. Take care of your people. Communicate a lot. I mean, this distressed time is different from the last one. At least the last one we were all together. Now we're all apart. So right. You have to be a little more flexible and use your technology. So in this cycle, we're all on Zoom. We're getting back to work, before most others, but we're really connected through Zoom. So we're communicating, and we're working hard, and we're making it happen. So that's the advice I would have. And you also have to be grateful for what you have. If you focus on what the news is telling you, all the distress, that will take energy from you that you can otherwise deploy into something that is valuable, that you can control, that you can create, and we can go into ways that we've done that. But those are really the tenets of how to survive and hopefully thrive through some really tough times.
Okay, so that advice would be would it be the same across the board to developers, those who own existing buildings, or those who are looking to acquire? Or would you say it would be, you would have different advice for depending on what their objective was, if they're a developer, or if they're looking to acquire, if they're looking to maybe recapitalize or something?
Yes, so if you're looking for a capital provider, right, in a time like this, now more than ever, you must know who you're doing business with. Make sure that you can separate the proverbial wheat from the chaff, because there's a lot of groups and people that tell you they can do something, and they're not real, or they're just hopeful to be able to do it in the future, or they used to do it, and they're going to be back in business whenever. But being reliable is always key. Whether it's a good market or not so good market. Today, more than ever, being reliable and being somebody that's going to be able to deliver a capital solution is huge. That's part of the reason why we're really successful. One of our philosophies has always been to under-promise and over-deliver, and that's a long-term view. So in good markets, if you under-promise and over-deliver, in bad markets, you're going to get that customer. And
right.
If you continue to perform and create relationships based on performance and trust, you're going to have that customer forever. So you have to really understand who you're doing business with and make sure that they're really reliable. And then the other factors are of being quick is really important. It's another one of our competitive advantages. And then being creative to really provide something that a user, the entrepreneur, the owner can do something with.
Okay, good. Well, you guys certainly have a unique product and service, a value proposition that many lenders in your space do not have. How do you take your product to market? You have this phenomenal product. Do you have originators that work directly with you and you go directly to the borrower, or do you just work with a select group of borrowers and developers, relationships you've established over the years? Or I mean, how do you determine who you're going to do business with, and how do you reach them? What is your method for reaching them?
Yes, various ways. We have, since being in the business for a long time and having a track record, we have borrowers that keep coming back for years, and now being that capital is pretty scarce, those older borrowers are saying, "Oh yeah, UC funds can do this." So we've got borrowers that we work with for 15, 20 years. So the repeat borrowers are really essential. The repeat borrowers are also a key piece to the referral network. So if there's a new borrower and they're new to the business, or they've never heard of us, typically I'll say just to our originator, just give them a list of as many referrals as they need, and typically it's a couple, three. But these would be titans in the industry that have been with us for a very long time, or somebody that just used our products and is really very happy with the performance. And they'll say that if the CEO signs that term sheet, it's going to get done. It's going to get done fast, and it's going to get you're going to be done on time and on terms. And then we have brokers that we've serviced for many years, and we've got also this new innovative thought that myself and the senior team came together with, and we call it Project Outreach. And we saw that the market just stopped. We call it pencils down, whatever. It just skid to a halt at the beginning of the pandemic. So it whether it was just fear or reality, most of the institutions that we would otherwise compete with stopped lending.
Right.
And a lot of them were CLO lenders, specialty financiers that had to have an exit strategy, with a CLO, or they borrowed money from investment banks with warehouse facilities or other institutional markets. They just stopped. When you have uncertainty, institutional markets, they usually slow. This one, they stopped.
Right.
So, yeah. So project outreach was, we're headquartered in Boston, about 50 strong, and we used this opportunity to take, other disciplines, other executives and line people that manned other disciplines of, say, underwriting, asset management, our finance people, our servicing people, and gave them an opportunity to tell the market, basically pick up the phones, for 2 or 3 hours a day, and tell the market about us and our capital programs, and that we're open for business. And that was another way really to turn this spigot up. And as our head of originations would say, for UC funds, this is our Super Bowl. It's never been better. And then we have a screening group that part of our fabric is that we have a dedicated executive that screens all the deals. So if you can visualize a funnel, big funnel. So deals come in the top of the funnel, and then they work their way down to the bottom, and then they get done. But we put about $1 billion a week now into the top of the funnel.
Wow.
And we decide what deals make sense for our investor base. So those are the different ways that we're making it happen today.
Okay. So I know that you guys make very large loans. What's the largest loan you've ever done?
Haven't done it yet, Charles.
You haven't done it yet. Okay.
We keep putting together capital, and then our capital, participates together. So
Right.
I'd say that our niche is around 3 million to 100 million, and then our sweet spot is in that 10 to 35 million.
So Dan, you guys are participating on the COVID-19 conference, the virtual conference that we are hosting on the CRE Media and Events platform. And obviously we're in a new environment with this COVID-19. It's your Super Bowl, right? But what's the main point? If you were to kind of boil it down to one main message that you plan on delivering or communicating to those folks who will be attending the conference, what would you say the key thing they want to know or remember about commercial real estate finance as we move into this COVID-19 environment?
So, COVID-19 is something that is totally unique, and we've never seen anything like that. Not even if you put 2008 Great Recession on top of hurricanes and 9/11, you put all those impacts together, it's still not as impactful as COVID-19. There's a lot of uncertainty. There's going to be a lot of opportunity in the future for investors that are opportunistic. But right now, there's a lot of woe. There's a lot of woe on the ownership of real estate, and then on the financing. I'm a developer, so I'm a borrower too. So I can speak, right from the get-go on the user of capital. There's not many banks that are even saying they're in business. So
Right.
You can look at commercial real estate rags out there, and they'll say these lenders are doing XYZ. But if you read the leverage levels and then the cost of their capital, they're really not in business. So
Right.
there's really a dearth of capital out there, and then there's very few specialty financiers. One of them is us. We really don't know of anyone else, but that should get better over time. And I'm hopeful that the American economy is as strong as it was prior to COVID-19, and it'll get better. Depending on the asset class is when, things will get better. So multifamily, typically last cycle and this cycle, I predict, will be the least impacted and come back the fastest. People need a place to live. The rest of the food groups, it will be slower. So student housing, there's a lot of question mark there. Retail, obviously with digital retail and then people not getting out and stores actually closed. That's going to take a lot longer to heal. We're an owner of hospitality, so we lend on a lot of hospitality, but we're an owner. I think that hospitality will be right there with retail, maybe a little bit better. If it's a drive up marketplace, that will recover faster than something that you need to fly to. We have hotels in Stanford. We were blessed that our outreach, our marketing group, we decided to think out of the box again and say, let's call first responders. Let's work with the mayor. Let's call the U.S. Army. And most of COVID-19 we were full on our 2 hotels. So that was a blessing. And now we're continuing to build market share. But it's an unprecedented time, and you really have to, as my mother would say, keep your eyes open and be careful out there, count your blessings, and it'll all come back. But it's just a matter of time.
Okay, well, very good. Well, Dan, thank you so much for making some time available. It's really, I've learned a lot about your company. Of course, we've talked and have done business for a number of years. We've known of UC funds, and you guys have looked at a lot of our deals. For us, you've always been the type of company that stands out in the marketplace as a company that provides unique solutions. And it's really been a pleasure to have you on our program for the benefit of our audience. And we certainly would love for you to come back, especially as we go through this cycle, kind of follow up, give us maybe a commentary on where we are at that point and what we can expect in the future. And really just give us some insight on what you're seeing at that time. But again, thank you so much for making time. And we certainly look forward to seeing you at the conference, the COVID-19 Impact on Commercial Real Estate Conference.
Thanks, Charles. We look forward to it.
All right. We'll see you later. Thank you.
Take care.
All right. Bye.
How will COVID-19 impact the way commercial real estate is financed? Join us as we bring active lenders together to discuss their debt and equity programs. Register for this must-attend event.